Since the beginning of the year, we've seen massive selling in equities by the insiders, the institutionals, the insiders. We just saw Jeff Bezos sell another $5.7 billion in Amazon stock. You got Warren Buffett sitting on $500 billion in cash and treasuries. You have Jamie Dimon selling. You have Zuckerberg selling. Now, gold is held on every central bank balance sheet in what's called the can't make it up. That's the name of it. If they did revalue it, first of all, it would benefit every central bank on the planet. Treasury only needs to tell the Federal Reserve, revalue the price of gold right now. And they do. Bang, it's done. No congressional approval. Every $4,000 increase in the price of gold would give the Treasury General account $1 trillion free and clear. If they moved it, as Jim Rickards says, to $24,000 an ounce, as crazy as that sounds, it would benefit all the central banks.
The tremors rumbled across Wall Street again last week, sparking concerns that the much-anticipated correction could be afoot. Gold's resurgence in monetary discussions reflects growing concerns about inflation, currency stability, and the limitations of purely discretionary fiat money systems. This renewed interest spans from central bank boardrooms to state legislatures and retail investors. AndySchectman, founder of Miles Franklin, has sold over $10 billion worth of silver and gold through his company. He understands the investment market in a way that few people in the industry do. In this video, Schectman notes the U.S. became a net gold importer for the first time in 35 years under Trump's presidency. He underscores growing institutional interest in precious metals and cites Trump's symbolic tweet on Easter, stating, "He who has the gold makes the rules." Looking at the market, Schectman reveals that over $100 billion in gold and silver has been quietly removed from exchanges this year, as institutional players drain physical gold from COMEX and LBMA, signaling a loss of faith in fiat currencies. This institutional gold accumulation is happening simultaneously with a wave of insider equity selling. Market titans like Jeff Bezos, Warren Buffett, and Jamie Dimon are divesting their own stock. AndySchectman reveals that Judy Shelton confirmed Donald Trump's intent to issue gold-backed treasuries on July 4, 2026. Gold has served as monetary bedrock for thousands of years, notes economist Judy Shelton in a 2025 interview. Comments from officials like Judy Shelton further suggest a strategic pivot away from fiat dependence. By significantly revaluing gold, the Treasury could unlock trillions of dollars without congressional approval. The proposal for gold-backed treasuries emerges in response to several interconnected challenges in America's current monetary system, particularly regarding Federal Reserve operations, interest payment mechanisms, and monetary policy accountability. Before we dive into AndySchectman's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I mean, look, we've become net importers of gold since November. And, there's no coincidence that's when he won the election. The amount of interest that we've seen on all levels, precious metals, since November, and the crumbs that have been left along the way from people such as Donald Trump himself, Treasury Secretary Bessent, Judy Shelton. I mean, on Easter Sunday, Trump says by tweet, "He who has the gold makes the rules," the golden art of negotiating. That comes after massive imports since November. In 35 years, I've never seen that. Ever. Never. Maybe 1 month here, 1 month there. But now, month over month, we're seeing massive inflows into the COMEX. We're seeing the draining of the exchanges and the LBMA and the COMEX. And then you're seeing all sorts of rhetoric that would lead one to believe that things are different this time. And but the interesting thing about it, when you take a step back and you look at the macro picture, Steve, what you see is something that I think really screams to the contrary. Since the beginning of the year, we've seen massive selling in equities by the insiders, the institutionals, the insiders. We just saw Jeff Bezos sell another $5.7 billion in Amazon stock. You got Warren Buffett sitting on $500 billion in cash and treasuries. You have Jamie Dimon selling. You have Zuckerberg selling. You have all of the insider selling. Since June, the institutionals have been selling on average $2 billion per week. You had the top 3 largest shareholders and board members of NVIDIA dumping hundreds of millions worth of stock. Now, this is at a time when the insiders are all leaving and the retail public, the mom and pop, have a larger exposure to the equity market than ever before, ever, including higher than the dot-com bubble at about 53, 54% of all stock ownership is owned by the retail public. At the same time, you're seeing the public really not have much exposure at all to metals on this level. And in fact, Rick Rule often says 0.5%. That's probably being generous. While you're seeing that the exchange is being bled dry. Now, to take possession of what amounts to, or to have delivered at what amounts to over 100 billion in gold and silver, 100 billion since the beginning of the year that we know of. You know, a lot of central banks are now admitting to buying privately from local and artisanal miners, not doing it through the normal channels that would get cataloged, like through the COMEX or through import-export numbers coming out of London or Switzerland, but that we know of 100 billion. So the insiders are going deep, deep, deep into physical commodities and actually taking possession, pulling them off of the exchanges while the public is going the opposite direction. So you have massive influx in metals by the insiders and leaving the equities by the insiders. It's the polar opposite by the retail public. What could possibly go wrong? Yeah, I think you're looking at a setup for a very big second half of the year, and I would expect the fall to, I think, show that. The insiders don't take possession in May of 8.5 billion in gold off of COMEX. This is 1 month that we know of, without it being something that they've given a lot of thought to and probably know the playbook, because at that level, those people just don't have the most money. But to take possession of that kind of, or even just to deliver that kind of volume into COMEX is incredibly sophisticated. And it's not something easy to do. You'd be far easier to for someone to give me $500 million and have me go out and scour the world and get them gold bars and stuff than it would be to take possession of metal. Now you're talking 100 billion off COMEX. So something deep is going on, and I would expect that to translate at some point into the retail side, as they're always late. The public is always late after the insider's position every single month. I asked Judy Shelton, who was Trump's nominee to run the Fed in 2016, do you think that they're going to issue gold-backed treasuries? That was what her book was all about. On my interview with her, she said there is no question, in no uncertain terms, did he say to me, July 4th, 2026, he will do that. It's a big day for him. It's the 250th year anniversary of the country, and he will issue gold-backed treasuries on the back end of the market that day. Now think about this. If you are reshoring all the gold, you let the price rise. Even Luke Gromen thinks it'll get to 4, 5, 6, 7,000, and then they'll revalue it. Now, gold is held on every central bank balance sheet in what's called the gold revaluation account. You can't make it up. That's the name of it. If they did revalue it, first of all, it would benefit every central bank on the planet. The Treasury only needs to tell the Federal Reserve, revalue the price of gold right now. And they do. Bang, it's done. No congressional approval. Every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear. If they moved it, as Jim Rickards says, to $24,000 an ounce, as crazy as that sounds, it would benefit all the central banks. It would massively devalue the dollar, to your point, create tons of inflation. But now that would give the Treasury general account $6 trillion free and clear. The Treasury issues gold certificates to the Federal Reserve. The Federal Reserve takes the gold and holds it. Prints the money, the $6 trillion, which devalues the dollar tremendously, just like Roosevelt did in 1933, gives the money to the Treasury. Now, the Fed doesn't own that gold. They own the dollar value of the gold. The gold belongs to the Treasury and to the American people. Now they start paying down their debt. They don't have to issue any long-term Treasury. They flood the market with stablecoin issuance on all the cryptos that fund the short-term Treasury debt to keep the game going. And with low interest rates, if you back the Treasury, the long end, like the 50-year to start with, as Judy says, and then 30 and 20 and 10 later, shorter durations over time, you can peg a zero interest rate to the long end of the curve. Zero interest rate, zero coupon, redeemable in gold. That gold is the inflation barometer. The more stupidity we use in monetary policy, the higher the price of gold goes. So we say, take our long-term Treasury. You can still trade it the way you always do, giving you great liquidity, but it is redeemable in the end in gold. Judy Shelton says they'll issue stablecoins off of those too, giving more energy to the short front end of the curve. And Now you have zero interest rates on the long end, redeemable in gold way down the road, starting at 50, 30, and then 20 and 10 over time. But now you can bring back your manufacturing in an era of a very devalued dollar and very low interest rates on the long end. Bring back your manufacturing, reshore your manufacturing, and grow your way out of this mess that we find ourselves in. It is, in my mind, the only way out.
Every empire in history has witnessed its peak and, eventually, an inevitable demise. The hegemony in politics and economy, reinforced by narrative, eventually loses its worth. It is all but a predetermined cycle, which exists by nature. The Big Beautiful Bill proposed by U.S. President Donald Trump aims to challenge the very laws of nature by slowing the decline of the American economy. AndySchectman outlines a bold strategy to restore economic stability by issuing stablecoins for short-term funding and backing long-term treasuries with gold. With global demand for U.S. debt collapsing, he warns of a potential dollar dump, inflation spike, and financial reset. He argues that gold must anchor trust in a system that has lost credibility through decades of mismanagement. A figure as vast as $37 trillion can seem abstract, causing many investors to feel removed from the realities of the national debt. However, the consequences of ongoing fiscal mismanagement extend far beyond Washington. As the foundation of the global financial system cracks, central banks, institutional investors, and everyday investors are voting with their wealth for gold as the de facto replacement. Let's get back to the interview.
You know, you look at this new thing that Trump wants to do as an example. I mean, it's a very challenge. It's not easy. He wants to, in essence, print money through stablecoin issuance and through the Treasury, and then reinvest in our infrastructure. Well, as the world reserve currency, can you really do that? Can you really print money to invest in your own country and then try and sell your products to the rest of the world who you expect to buy your treasuries? If I were those countries, no, I'm not buying your treasury. Absolutely not. Why would I? And so this is a situation where it's going to be hard no matter who's in office. But if you don't attempt to do this, ultimately we end up at a situation where the rest of the world no longer wants to hold our dollars or our treasuries, and they dump them. And that's the Great Reset right there, because the 30 years of suppressed interest rates have created distortions in asset prices, misallocations of capital and resources. And so as rates spike, because people dump dollars in treasuries because they're sick and tired of the way we've mismanaged the world reserve currency, the weaponization of the dollar, the wars that we're participating or funding in all around the world, et cetera. And when that tsunami of dollars and treasuries hit our shore, it results in hyperinflation. To compensate for the massive spike in inflation, rates have to go to the moon, which would blow up everything. Stocks, bonds, real estate, the banks and the insurance companies are all loaded with treasuries. It is the Great Reset. So short of that happening, you more or less soft default on the value of the dollar in order to peg the long end of the treasury in gold. You got the front end of the treasury covered with stable coins. That's why they're doing it. It's not because they're all into crypto. It's because that they need to get demand for that vacuum of vanishing demand that we see all around the world right now, where countries aren't buying treasuries anymore. And you keep rates low enough, you may have a shot at bringing back your manufacturing. You go away from that plan, there is no out. There is no option. We will never pay off our debt otherwise, never. We don't make anything anymore. We don't manufacture anything anymore. So is AI enough to do it? Hell no, it's not, because the rest of the world is doing AI too. And so I think we've squandered a beautiful opportunity, and what once was a privilege to be the world reserve currency is now more of a problem, because we continue to hollow out and eviscerate our manufacturing with the world reserve currency status. China doesn't want to be the world reserve currency. They don't want to do that because they'll hollow out their manufacturing too. Instead, I believe gold will be the de facto reserve. It will act as the treasury. And you are seeing all sorts of things going on right now where countries are trading their own central bank digital currencies, in particular over the BRICS bridge that has now been expanded to non-BRICS nations, and settling imbalances in gold. I believe that is the framework, whether it be backing the treasury and redeemability, or the way that the BRICS have spoken of in their unit token, and the way they're doing it right now with the expansion of the Shanghai Gold Exchange to other locations throughout the Belt Road. redeemability will be in gold. That is not replacing the currency, but it's replacing what stands behind the currency. And it's the trust that we have squandered through weaponization, in particular against Russia, where much of the world thinks we're no better than they are. We invaded Iraq 22 years ago, and we're still there. And we went there for weapons of mass destruction. Sorry, we didn't find it. I know we blew everything up, toppled your regime, but hey, sorry. Well, why do we not face the similar repercussions that someone like Russia did? We made the decision as the world reserve currency to be judge, jury, and executioner. I'm not paying any, passing any judgment on any war. I'm just simply saying as the world reserve currency, it is not the prerogative of the issuer to make those kind of decisions, especially when many would say our actions are just as provocative as others or more. And so that puts trust in a system that's all about trust. It's not backed by anything anymore, but trust, the full faith and credit. What credit? We're broke, we're insolvent. The faith? What faith? We take 5 billion of Russian Forex reserves and kick them out of SWIFT because they're doing what they believe they need to do. But when we do it, there is no repercussions. That's pissed off the world in a line you can't come back from unless you do something very drastic. And I think that's where we are right now, drastic measures, because short of that, I have no idea.
As former Fed Chair Alan Greenspan once noted, gold still represents the ultimate form of payment in the world. Fiat money, in extremis, is accepted by nobody. Gold is always accepted. As the U.S. equity loses demand from some of its previous key buyers, it may only be a matter of time before commodities surge in value. Gold has continued its record-setting pace, rising 26% in U.S. dollar terms in the first half of 2025, and reaching double-digit returns across currencies. What if gold is becoming the foundation of a new financial system? Will you act before it's too late? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.